Yesterday, the euro held steady against the US dollar, supported by upbeat data on economic sentiment in Germany and the euro area. Investor morale improved much more than expected, which helped the European currency trim some of its earlier losses in the first half of the day. US statistics came in worse than anticipated, which also fueled buying momentum. However, the euro failed to consolidate above its intraday high. Currently, the euro-dollar pair is trading within a fresh triangle pattern, which indicates a potential decline in the European currency. Meanwhile, the British pound fell sharply, weighed down by data showing a rise in the UK unemployment rate. At the same time, average earnings growth in Britain remains strong, which is expected to spur inflation. Today's macroeconomic calendar includes a batch of important reports from the UK. The Office for National Statistics said that Britain's inflation rate remained unchanged at 0.6% in March. Annual inflation eased to 3.2% in March, slightly higher than the 3.1% forecast from economists. Core inflation, which excludes energy, food and tobacco prices, also slowed to 4.2% from 4.5% in February. All of these suggest that inflation is indeed cooling, but at a slower than expected pace. Against this background, the pound sterling gained some ground today. However, it is difficult to predict whether bulls will remain strong during the American session. In addition, traders will receive similar data from the euro area. If consumer prices fall, the euro will come under more pressure. Later in the day, the focus of market participants will shift to the third survey known as the Beige Book and speeches by Fed officials. Demand for the US dollar is likely to ease, with the euro and British pound gaining upside momentum, or at least trading sideways. Now, let's move on technical analysis. According to the 1-hour chart, a false breakout at the support level at 1.0605 will generate a strong buy signal, bringing the euro back to 0.647. However, its upside potential is limited. The European currency is unlikely to rise above yesterday's high, as market sentiment is expected to remain bearish. A false breakout at 1.0647 will make it possible to sell the pair. Alternatively, if the price breaks above 1.0647 and tested from the top down, the euro will have a chance to climb to 1.0686. At this level, I recommend going short on the rebound to catch an intraday correction of 30-35 pips. In a burst scenario, if the price falls below 0.605 and tested from the bottom up, the volume of short positions will increase, with the euro diving to 1.0569 and 1.0545. At the level of 0.545, it would be a wise decision to go long on the rebound, counting a 25-30 pip move. Long positions against the trend at 1.0605 and 0.569 can only be considered amid a false breakout. Speaking of the British pound, a false breakout at 24.50 will generate sell signal, thus dragging sterling down to 24.07. If the price dips below this level, the British currency is likely to extend losses and head towards 23.75 and 23.40. At the level of 23.40, traders are recommended to open long positions on a rebound, expecting an intraday correction of 30-35 pips. Going long at 23.75 and 24.07 will only be relevant in the event of a false breakout. In a bull scenario, if the price breaks through and consolidates above 1.2450, the pound sterling is expected to rise to 1.2493, a potential upper boundary of the sideways range where I recommend going short on the false breakout. Short positions on the rebound can be opened at the level of 1.2539. In this case, one can count on an intraday correction of 35-40 pips. Best of luck.